Picture this. A micro-cap AI company most investors have never heard of just posted its third straight quarter of record revenue, $14.2 million, up 35% from last year. Their losses? Slashed by more than 75%. Gross margins? Expanding to 63%. And the stock? Trading at $1.90 with Wall Street analysts projecting it could hit $4. This isn't some pie-in-the-sky startup burning through venture capital. This is a company providing mission-critical technology to state transportation departments and law enforcement agencies across America. They're powering intelligent traffic management systems, virtual weigh stations for commercial vehicles, and automated license plate recognition networks that help keep our roads safer and more efficient. The market has brutalized this stock. It's down significantly from its highs. Yes, the company is still unprofitable. Yes, there are execution risks. But something fascinating is happening beneath the surface. They're approaching break-even faster than anyone expected, winning multimillion-dollar government contracts, and operating in a specialized niche where competition is surprisingly limited. 3 analysts have this rated as a strong buy. The average price target sits at $4, representing potential gains of 110% from current levels. Some targets go as high as $4.50. The question isn't whether this company has potential, it's whether they can execute on their turnaround before the market loses patience. Let me show you what I found when I dug into the numbers. Before we dive in, welcome to Smart Investing, your source for discovering undervalued technology and AI stocks that Wall Street isn't paying attention to yet. I focus on companies with real products, real revenue, and real growth potential trading at prices that don't reflect their opportunity. If you're interested in finding these hidden gems in artificial intelligence, smart infrastructure, and emerging tech sectors before they make their big moves, hit that subscribe button and tap the like icon. I publish regular deep dives on growth opportunities the market is overlooking. Now let's talk about this AI Roadway intelligence company. Today's analysis focuses on Recur Systems Incorporated, ticker symbol RKR, trading on the Nasdaq. Recur develops artificial intelligence-powered roadway intelligence technology using advanced computer vision and machine learning algorithms. Based in Columbia, Maryland, and founded in 2017, Recur converts raw video footage and sensor data from roadways into actionable intelligence. Their core platform, Recur One, serves as the brain behind 3 main product lines: Recur Command for managing transportation infrastructure, Recur Discover for analyzing urban mobility patterns, and Recur Scout for public safety applications. Their customer base includes state departments of transportation, municipal governments, toll road authorities, and law enforcement agencies throughout the United States and select international markets. The business model combines hardware sales, vehicle recognition camera systems, with software-as-a-service subscriptions for their analytics platforms. What makes Recur compelling right now is the convergence of 3 critical factors: accelerating revenue growth, rapid improvement in unit economics, and a strategic position in an underserved market niche. The revenue trajectory tells an encouraging story. Third quarter revenue of $14.2 million marked 35% year-over-year expansion. This wasn't a one-time spike. It's the third consecutive quarter where Recur has posted record-breaking results. Looking at the full year, they're tracking toward $52 to $54 million in revenue for 2025, representing roughly 32% growth from the prior year's $46 million. The path to profitability is coming into focus. Q3's adjusted EBITDA loss of just $1.8 million represents a massive improvement, down more than 75% compared to the $7.4 million loss in Q3 2024, and down 65% from Q2 2025. They're demonstrating that their SaaS-based model can achieve operating leverage as revenue scales. Adjusted gross margins hit 63% in the quarter and 55% for the 9-month period. Strategic contract wins are building momentum. Recent successes include a statewide deployment with the Texas Department of Transportation, a $1.4 million contract extension with the Central Texas Regional Mobility Authority, and a major agreement with an unnamed Sun Belt state to deploy 150 Recur Discover systems under a data-as-a-service arrangement. These multi-year government contracts provide predictable, recurring revenue. The competitive landscape favors them. Recur occupies a specialized segment of AI-powered roadway intelligence where major technology players haven't established dominance. Their integrated capabilities, license plate recognition, vehicle classification, real-time traffic pattern analysis, and predictive modeling, address urgent needs that transportation agencies face with limited alternative providers. At the current $1.90 price point, RKR presents a speculative opportunity in AI-enabled transportation infrastructure. The analyst consensus of $4 implies 110% upside potential, with the most bullish projections reaching $4.50. Optimistic scenario: if Recur maintains this revenue growth trajectory, achieves adjusted EBITDA profitability by late 2026 or early 2027, and continues securing major government infrastructure contracts, the stock could reasonably trade between $3.50 and $5 within 12 to 18 months. That represents potential returns of 85% to 165%. At that stage, the company would likely be generating $70 to $80 million in annual revenue with positive operating cash flow, supporting a substantially higher valuation multiple for a growing AI infrastructure provider with government-backed recurring revenue. Risk scenario: revenue growth could plateau if their sales pipeline doesn't convert to signed contracts. Continued cash consumption might necessitate dilutive equity financing. Larger technology companies could enter this market segment with superior resources. Under these circumstances, the stock could decline toward $1 or potentially lower if the turnaround narrative fails to materialize. That's the complete picture on Recur Systems, an AI roadway intelligence provider trading at $1.90 with analyst price targets suggesting 110% upside, posting 35% revenue growth, and rapidly improving its path toward profitability. 3 consecutive quarters of record results combined with major government contract wins create an intriguing speculative setup. What's your take? Does the combination of revenue acceleration and margin improvement justify the risks inherent in this micro-cap turnaround story? Share your perspective in the comments. If this analysis provided value, hit that like button and subscribe to Smart Investing for more coverage of overlooked AI stock opportunities. Remember, this content is educational, not financial advice. Thanks for watching.